So something big is happening in Singapore's property market. For the first time in 17 years, we're seeing new home sales drop actually to a record low. So what's actually causing this sudden slowdown? Is it the rising global inflation or perhaps the higher interest rates or something more specific to Singapore property scene? So we're going to check out this information in this video. And while new home sales are falling, question is, should we be worried or not? Or could this actually be the perfect chance to uncover new opportunities? The private property prices in Singapore dropped about 1.1% in the third quarter of 2024, a noticeable change from the 0.9% increase in the previous quarter. So what's causing this? Firstly, people are less eager to buy homes right now, and developers aren't selling many, and with the high prices, right? So along with all these concerns about the economy, are this making the buyers hesitant? So only 1,054 new private homes excluding ECs were sold between July and September. While there's a 45% jump from the previous quarter's low of 725, it's a far below the typical average of about 2,200 homes sold per quarter over the past 5 years. Why so few? There aren't many new property launches, and maybe events like Hungry Ghost Festival, the school holidays in September kept some potential buyers away. So looking ahead, the market might stay unpredictable. With fewer new launches and cautious buyers, right, the buyers, prices and demand would shift further. Now, this leaves both buyers and investors with a tough decision. Should they go for a new property now or wait to avoid the risk of losing money if the market changes again? What do you think about Singapore's property market right now? Are you feeling positive or worried? I want you to share your thoughts in the comment section below. Now, let's break this video into 3 simple parts using the REM method. Number 1, how do people feel about the market and their confidence in investing? Number 2, how are property prices being affected? Number 3, what are the government doing and how it affects the economy? Hey, this is Coach Edmund Tan, your Singapore Real Estate Insider. So before we begin, don't forget to hit the subscribe button and tap the bell icon so you won't miss our weekly tips to stay updated and grow your property knowledge. The property market seems slow right now, but that could actually work in your favor. In August 2024, new home sales hit the lowest in 17 years, and developers are moving very carefully, leaving many buyers unsure about what's their next step. Now, this might just be the perfect time for a smart move. Really unsure about whether now's the right time to buy a property? Well, you're not alone. Many people are waiting for the perfect time to jump in, but here's the thing. Property prices are still expected to go up. Right now, fewer people are buying, which could be a great opportunity for smart buyers to act while others hold back. Now, since September, interest rates have started to drop and they are expected to keep falling until 2026. Now, when rates drop, more people actually start buying, which can push prices even higher. So, what do you think will happen to prices when more people start buying? If you act now, you might lock in a better deal before competition hits up again. Instead of waiting for the perfect moment, why not take advantage of today's market and set yourself up for future gains? In quarter 3, July to September, property prices did drop by 3.8% to the previous quarter when prices went up by 1.9%. For owners of landed properties, this drop might come as a surprise, but there's more to the story. Like non-landed private properties, example condos, prices fall slightly by 0.3%, undoing the 0.6 rise from the previous quarter. But not all areas were affected the same way. Actually, CCR prices in prime areas saw the biggest drop by 1.5%, and this followed by a smaller 0.3 dip last quarter. If you're considering buying in these high-tech regions, this could be a good opportunity. And in the OCR, prices here have dipped by 0.1%, which reversed the 0.2% increase from the previous quarter. Now, this is a small change but worth keeping an eye on. So why did prices fall? A few reasons. Hungry Ghost Festival in August. This is a typical period where buyers hold back on their major decisions. And also the September school holidays. Fewer property launches and less buying activity happen during this time. Now, buyers are now focusing on areas where they can get more bang for their buck, especially with the economy looking a little bit shaky. Interestingly, even though fewer homes were sold, the average prices of new condos shot up by a staggering 42% from July. Prices jumped from 1.7 million to nearly 2.4 million, leaving experts scratching their heads. Now, this surprising price increase despite fewer sales hints that rich buyers might still be driving the market. Now, limited housing supply or attractive investment options could be influencing this trend also. So, why are sales dropping? Here's what's going on. Number one, the high interest rates. The biggest issue is the high cost of borrowing. With loans more expensive than before, many potential buyers are holding back. And this not only makes homes less affordable, but also discourages people from buying. Now, as a result, the housing market is slowing down, and for many, owning a home feels like a distant dream already. But will it be so in the coming months? Because first comes the news in September. Then we get this from the following month. What does all these indications tell us? A recovery? Let's take a look. In general, what happens when there is a recovery of interest rates? Number one, many see it as a sign of the economy getting better. Number two, with interest rates coming down, consumers will start to come back into the property market with this sentiment as they have been holding off for a while interest rates went up as high as above 4%. So are we expecting a shift in consumer behavior very soon? Now let's study this further and let's use a real example. So here I want to show you guys that today, based on a 4.25% interest rates for a $2.5 million property, what's the comparison between that as well as when the interest rates drops to 3%? So this is where we are going to come and show you the details of how we are going to do in terms of calculations, and you can see whether there's big differences. So let us use the investment suites that we have, and let's go to the mortgage loan, and let's just key in the numbers 2.5 million. And right now, let's use a 4.2 interest rate, which is a higher interest rate right now, to calculate and see what is the numbers. And if let's say you're based on a 30-year loan, your money installments will come out to about $9,234. So with this new interest rates adjustments downwards, with some of the banks actually offering even lower than 3%, let's just see how much of a difference that we can see for a 3% interest rate. So right now for 4.25% it's at $9,224. What about a 3%? You can see it drops almost $2,000 to $7,900. And this is one of the main reasons why buyers are coming back into the marketplace, because of the lower interest rates. And we are able to track a lot in terms of our property prices as well as our bank home rates, because we will be tracking this live on a daily basis. And you can see that for private property at the current moment, we are having the entire SORA rates that we can track it on a monthly basis. And as per the bank's rates, we are always updated with the latest information here. For private SORA floating rates, you can see at the current time of this recording is hovering about 3.27, 3.5, or even all the way to 3.95. But interestingly, if you are looking at fixed rates, you can see there's a huge difference in terms of fixed rates. That for UOB right now is going at 2.6%, and most of them are hovering below the 3% interest rates. So this gives you a good indication that today, if you want to keep yourself updated in terms of interest rates, as well as your refinancing plans, these are the information that you need very regularly. Now, can you imagine if you missed out on refinancing? The global economy is uncertain right now because of higher prices and the rising cost of living. This is making people more cautious about spending, especially on big things like buying a property. Many still prefer to wait and see how things turn out instead of rushing into a purchase, which definitely is slowing down the sales. And at the same time, the overall mood in the market isn't that great. With property prices still going up and many potential buyers feel unsure and hesitant about whether it's the right time to buy, this is the situation why the price is so high right now, and let's wait for it to drop before I buy. Sound familiar? Well, people are afraid that if they wait too long to buy, prices will also go up even more, making it harder for them to afford property. Now, this fear is causing them to hesitate and not take action. Whereas the potential buyers were caught between wanting to invest in a property and the fear of making the wrong decision. Now, I feel you because this is exactly what we're experiencing on the ground as well. So there's a lot of fear in the marketplace today. It's because there was always this recession. And let me share with you, actually recession has been progressing every single year that we have this fear in the marketplace. In 2016, Brexit was happening. In 2017, North Korea conducts the nuclear test. Whereas 2018, US trade wars was going on. So actually every other year we are seeing some form of recessions in the entire economy. But what stops people from doing it is because of the fear and non-understanding. So today, even if you had actually just purchased any property back in 2016, your property would have already risen in value till today at least about 30%. Even with all the various speed bumps, as I like to call them, speed bumps going on with every other year of recession. So today is all about coming down to the fundamentals and the foundation of how you are looking at property. Today, if you're buying property with a very high risk mentality, then of course, when there's any recession situation or any negative news out there, you'll be very extremely cautious and worried that, hey, can I be paying off my mortgage? But today, if you're using a very safe and less risk approach, then what we can do is you can actually purchase a property already, and from there, your property will risen in value over time, like what we are showing you now. A key question for anyone thinking about buying or investing in property is now a good time to get in? Or is it better to wait for a better opportunity? Well, these are my projections for a couple of months regarding the new launch sales in first half of 2024 and how the second half launches are going to perform. Well, you can check out the video somewhere here. So why am I sharing this with you? Because we will be experiencing another knee-jerk reaction largely due to the interest rates drop. And I want you to have a first mover advantage. Now, this is what I project is going to happen in the next 6 months. First, interest rates drop. Buyer sentiments increases. News articles all blasting new launch sales more than 50%, 70%, 80% sold. Buyers read and find the market is better. Now, more interest rates articles will come out. Banks starts to adjust their rates downwards, and the demand in the market increases. And what happened to the price by then? Do you want to wait for this to happen, or do you want to prepare ahead for yourself? The situation isn't as simple as it sounds. Let's break it down. Some experts are feeling positive, predicting that interest rates will be lowered later again after this year, and after a small drop in September. If that happens, it could boost the market, making more people want to buy. This increase in buyers could lead to more competitive property, which could push prices up. So if we're thinking about buying a freehold personal property, waiting too long might be missing out great opportunity since prices for new properties usually go up over time. Statistics have shown the rebound is quicker than drop. So let's study this more. So a lot of us, when we are worried about buying a property, is always we are very concerned about the downturn, of this kind of situation. But a lot of the homeowners, when we are looking at all the negative news out there, you forgot about the upswing that we are seeing. So even though in the Asia financial crisis, it came down 40%, it actually rebounded back to 40% as well. And in the dot-com and SARS period, although it came down 20%, the market actually progresses up to 58% growth. So there is a very huge rebound every single time that we are seeing. And in the global financial crisis back in 2008, 2009, this happens and the entire market went up almost 62%. And this is the reason why there was a cooling measure during this period that actually affected directly our affordability as well as our ability to actually borrow. So this is the situation that we're seeing in the past, although this has already been outdated because of all the speculations that was in the past will never happen again with the implementation of the cooling measures. So right now what we are seeing is that today you can see, even at this current moment of time, we can see that there's still a drop even in cooling measures of about 11.6%. But do you see the rebounded time that it actually went up quicker in a shorter period of time? So this is what we are experiencing that today, even though there is a slight dip, or should I call speed bumps in this case, the rebound is usually a lot more quicker and a lot more faster. So whenever the government has actually when they see that there's a double-digit growth, close to double-digit growth in our price index, they will want to implement another cooling measure, which is what exactly happened here, another cooling measures. And that's when the market actually came down a little bit. But this time around, you see that the amount of percentage drop is actually very minimum in a very short period of time. So the drop is always very short, while the rebound is always quicker than the drop. As you can see from here, it went up 3.4% in just 3 quarters. And eventually, the market adjusts by itself through different cooling measures, and it only came down 0.1%, and that's where things skyrocket during the COVID period to 28.1%. So the government has been trying to use different cooling measures, as you can see, to try to cool down the market. But that only has a very small impact of 0.2% for just 1 quarter. And eventually what happened is the market rebounded by itself. So this is what we are seeing, that today the rebound has always been quicker than the drop ever since 2013's cooling measure has been coming in. And this is something that you as a homeowner and busy professionals must take note of what is happening in the past so that you can track your future better. Thinking about investing in a new property launch, it can be exciting, but with so many choices, how do you make sure you're picking the right? Instead of stressing about when exactly to buy, which some experienced investors get wrong now, it's better to focus on things. Let's look at evaluating a new property. Number 1, future development plans. Keep an eye on future development plans in the area. This means things like new MRT stations, roads, business centers that are planned, because these changes can affect the property price a lot. So for example, if a new MRT line is being built nearby, it will make the area easier to get to, which will also attract more people and businesses. As a result, property prices in the area are likely to go up. By staying informed about these plans, you can make smarter investment choices. Number 2, supply and demand dynamics. Let's talk about the supply and demand. It's important to look at how many similar properties are available in the area you're interested in. This helps you understand how competitive the market is. Now, reach out if you want to go through our live masterclass online where we dive deeper into this. And you can comment below masterclass and we'll get you the invitation. So if there are a lot of new properties available but not many people are wanting to buy, the prices of older properties might drop in the future as well. So knowing what's happening in the market right now helps you figure out if the property you're thinking about will likely increase in value or just stay the same. Making a smart choice now can save you from losing a lot of money later. Number 3, price trends and comparisons. When it comes to pricing, being informed gives you an advantage. Check out the price per square foot of the new property and compare it with similar projects nearby. If it's a bit more expensive, don't rule it out immediately. A property in a great location or with smart designs can be worth that extra cost. Look also at the special features it offers, like high quality materials, modern design, or even eco-friendly elements, which could make the price higher a good investment. In the end, it's not just about how much you pay, but the value you get for your money. So I've done a lot of comparison videos for new launches that you can check them out here too. The deep dive analytics that we do are not just on the surface. We go really, really deep. Number 4, location and connectivity. When it comes to choosing a property, location is super important. Now think about how close it is for things like public transport, schools, shops, and other useful places. Properties that are easy to get to and near important spots usually attract more people, whether they are tenants or even buyers. And this means a higher demand and a higher chance for the property value to go up over time. So for example, imagine if you or someone else needs to travel to work, pick up kids from schools, or enjoy a nearby park. Having all these nearby makes a property much more attractive, right? So when you're looking at new properties, take some time to walk around the area. You might find places that make the property even more valuable than you first thought. And as for buying in a place you're familiar with or prefer, yes, it can be a good strategy because you already know the area and what it offers, right? but this comfort can give you the confidence in your investments. Number 5. Unit layout and stack facing. When looking at a property, it's important to think about the layout of the unit and which way it faces. These things can affect how much people want to buy or rent your place. Now, for example, units on higher floors usually have better views and airflow, making them more attractive to buyers or tenants. But also remember, you might pay more premium for these features. So it's good to consider whether the higher price is worth it for future resale as well. Also, a smart layout that uses space well and can make living in the unit more comfortable. So think about how the design fits your needs and your lifestyle. By paying attention to these important factors, you'll be in a better position to make smart choices when looking at the new property. So investing wisely means understanding the market and knowing what makes a property more valuable over time. Keep in mind, making the right decision now could bring you great rewards down the road. As we head into the final months of 2024, there are signs that the property market could start to improve. Lower interest rates and some exciting new property launches could help things bounce back. But will it be enough to really spark the big recovery? While these changes might boost the sale of new homes in the short term, experts do believe that the real recovery will likely come in 2025. And why 2025? Because by then, we could have a better understanding of the global economy, which will help buyers feel more confident and support a bigger rebound in property sales. Now, for now, it's expected that around 5,000 to 5,500 new homes will be sold by the end of 2024. This is a good number considering the current market conditions, but it could just be a preview of what's to come in the future. From my own personal perspective, I see great opportunity coming soon. So if you'd like to take advantage of this, get in touch and we'll help you through each step by step of the entire process. Now, to get advice that's customized just for you, right, I want you to pause the video, scan the QR code on your screen, and by doing this, you can get an expert advice to help make confident property decisions. If you found this video useful, helpful, please like and subscribe and hit the notification bell so you don't miss any future updates about Singapore property market. Your support helps me keep creating useful content, and thanks for watching. And remember, staying informed is the key to making smart property choices. And I'll see you guys next time, and let's stay ahead of the market.